afternoon. Welcome to your guide to government audit preparation and year-end close. We're so excited that you're joining us this afternoon. I'm Karen Curtin, Director at Forbes Mazars here in our Dallas office. I have 17 years of public sector experience, starting with 11 in the audit of governments and not-for-profits at a predecessor firm to Forbes, and then spent 6 years at a local municipality as controller and director of finance, learning what it's like to be on the other side of the auditor-auditee table. This year, I've come back to Forbes Mazars to start a new line, the Government Outsourced Accounting Services line. And today I have with me Tyler Hoffman.
Hey y'all, my name is Tyler Hoffman. I'm an audit manager with Forbes Mazars, primarily working in our nonprofit, higher ed, and public sector space, focusing most of my time on municipalities, cities, and counties. Looking forward to co-presenting this presentation with Karen today and sharing with y'all some tips, tricks, and best practices as it relates to your year-end close, as well as audit preparation.
We'll get started with an overview of our presentation, what we're going to be covering in the next hour, and why this topic is so important. So, of course, an annual audit is required for many of our attendees, and so preparing for it and making the process as efficient as possible is critical. Your annual audit is irreplaceable as a tool to ensure that your internal controls are functioning as designed, and that your financial statements are materially correct. We hope that you'll view your auditor as a resource. They're available to help not only during the audit period, but all year long. We're in municipalities and county governments virtually the entirety of the year and can just bring a great perspective to you. As a result of the audit, your auditors may find opportunities for improvement, and that might be processes in internal controls. It might be some efficiencies that they see, and those opportunities could be communicated to you verbally or through your management letter. We hope that you'll take hold of those and embrace those suggestions, implementing them as soon as you can. Generally, those are going to be provided at the end of the audit, which may be 3, 4, even 5 months through the fiscal year. So sooner that you can take a look at it, the more beneficial they can be. So our agenda today is to cover the 2 main topics, preparing for as tips for an efficient year-end close. We are following a calendar format, and our assumption in the calendar is that this entity that we're going to discuss will be a December 31st year end. So of course, if your year end is different, then you'll adjust. But the idea is that we're going to start in July through September, and those will be the months just after you've received your audit, moving through the rest of the year, your year-end close, and going over some reporting considerations, as well as some suggestions of what to do if you happen to be short-staffed, and questions and answers. Your question and answers can go through the chat box, and if we don't have time to answer them during the presentation, then we will respond at a later time. We'll get back with you. So we're coming to our polling question, number 1. When does your organization start preparing for the year-end audit? A, about halfway through the fiscal year, once you've recovered from the prior year-end audit. B, about 3/4 of the way through the fiscal year, after the bulk of the upcoming budget has been done. C, after the audit engagement letter has been signed and we receive the PBC list. Or D, the day before our auditors walk in the door. And this polling question will be up for about 1 minute, and so we'll give you time to respond and make sure everyone gets their CPE. So while that's going through, we'll give that just a moment. And we hope that this presentation will spur some ideas, some thoughts that perhaps you can implement to get a little bit quicker through. So far, it looks like we have about an even split between halfway through the fiscal year, once we've recovered from the prior year audit, or about 3/4 of the way through. So both good answers. We have a few that still last minute, and we hope that we can encourage you and excite you about getting ready a little bit earlier in the process. So when should I start preparing for a year-end audit? It's a loaded question, right? So ideally, you would like to start preparing throughout the year. But as soon as the prior audit is issued, that can be a time when you want to really start focusing in on what you're going to need for the next year. There's communication is so important at this time. Frequently, at the end of the audit, you'll have an exit meeting with your engagement executive. And at that time, it's great to go over what went right with the audit and what could be improved. Perhaps there is some scheduling issues. You may have been ready earlier, or on the flip side, or some extenuating circumstances, maybe you needed another week to get ready. There may be transactions that you want to discuss. And this is also a good time to talk about the PBC list that the auditor gave you. Clarify some of those items. Maybe there were some requests that you felt that you gave that perhaps they didn't use or didn't use fully. So take advantage of that time to really have a good conversation and see if you can resolve some of the issues from the prior audit and take those forward. Whether you're conscious of it or unconscious, every payable that you record, every deposit, every journal entry is really your audit prep. So it is super to just make sure that you're doing things right along the way by having one person enter those transactions, another person carefully review them. If the little transactions that you're making along the way are correct, then at the end of the year, you'll find it's very easy to have your closing and get through the audit. If there's questions along the way, give your engagement executive a call. And that could come up because there's a transaction that you didn't anticipate. Perhaps your counsel decided to buy some land and that wasn't part of the original plan for the year. Whatever it is, if you have a question, reach out. They can offer you guidance. And it's nice to have a discussion of new transactions or perhaps even new accounting standards you're not sure how to handle earlier in the year rather than during the middle of the audit. As we mentioned, there are small steps that you can take throughout the year to get ready for your audit. Capital assets and leases and civitas always seem to be a trouble spot, so we're going to discuss those a little bit later in the presentation. We have a full slide on that because it's such a sticking point. But one of the recommendations that we have is to reconcile balance sheet accounts monthly. I know this can be a big ask because there's so many balance sheet accounts, but if you can divide them up into small sections and just eyeball those, when you're doing your close at the end of each month, make sure they're going in the right directions. For example, if you have a prepaid insurance, make sure it's trending down as you would expect. Implementing strong interdepartment processes is this very important and really goes hand in hand with the next item, which is speeding delivery of the receipt of your payables. So for many municipalities, there is a decentralized purchasing. So you may have library making purchases and perhaps Parks Department is making purchases and sending their invoices into finance. I know in my experience, sometimes those invoices came later than I was hoping that they would. I would see an invoice in March that was for service that was rendered in January. And there were frequently some organizations, some vendors, I always say that just we're always behind. And at that time, I would reach out to the department's head and ask them to call the vendor and let them know, hey, we really need your invoices within 30 days of the end of the month. And it can take several calls, but I encourage you to be persistent and get those vendors really working for you instead of kind of working against you. Single audit programs and major and minor programs are good things to take a look at throughout the year. Just scan your general ledger and get a feel for which programs may be major. Sometimes you know, and sometimes something will sneak up on you. So if you take a look at those monthly, you can get a feel for where you're headed with your single audit. The next item is in relation to credit cards and purchasing cards. I know accruals at the end of the year can sometimes be a hassle if the cycle for the credit card doesn't agree with your month-end cycle. So if it's ending on the 20th, you're going to have some invoices that relate to the prior fiscal year and some that relate to the next fiscal year. So instead of having to go through and tease all that out, I would suggest that you contact your credit card or purchasing card company and ask them to move your statement cycle to the end of the month. It's a little bit of a hassle because you'll have a couple of, extra payment in there, right? That may be 2 weeks or a week. But once you get to the end of the cycle, it's much easier to roll forward with that. And another tip we have is to keep your records of new or closed bank accounts. That could be an investment account, could be your bank depository, but sometimes your small investment accounts that get opened. And I would keep the records of those in an electronic file that you tuck away for your audit, so that when it comes time to send out your confirmations, you'll have a reminder of how many accounts that you have that have gotten closed and new ones that have been opened, so that you don't have items that are slipping through the cracks. So tips for capital assets and leases. In my experience, this has just always been a sticking point. It seems like it's the last item to get done in an audit. And there's so much to keep track of in capital assets. And in finance, you may not have a close pulse on that. So as a suggestion, when you see items come through that are capital, new vehicles that are purchased, sets of computers, you may want to take that electronic payment folder that you have, that payables packet, and put it in a folder called fixed assets, so that when it's time to do the roll, you're reminded of those items and know to look for them to get everything recorded. Another suggestion is to schedule a quarterly meeting with public works, could be your engineering department, sometimes even parks departments are running big capital projects, just to ask them, hey, where are we on these projects? And which ones do we anticipate are going to be closing? That could be, that the retainage is paid, it's completely done, or which ones are going to cross into the next fiscal year and need to be in CIP. Maybe they're still remaining in CIP from the prior year, depending on the size of your organization. But those department heads will be a wealth of information. And if you're not sure where to start the conversation, then check out the budget. Your budget will have a detail of different projects that are expected. This can also be a good time to go over leases and subitas with those department heads. Ask them about anything new that they've purchased. They may not even be thinking about a lease or subita. They're not going to necessarily know what a subscription-based information technology arrangement is, and not going to be thinking in that way. But if you ask them good questions, then that information can come out. Also a great time to ask if there's been any changes to existing terms of your leases, and make a note of that. So when it's time to prepare the audit, then you have everything ready to go.
All right. So we are now in July through September, and we have survived our previous audit. So what kind of things can we be working on right now to get a jump start on the next audit? Well, one of the easiest things that you can do is make sure that your fund balance and net position agrees to your previously issued report. One of the first things your auditors are going to do when they get that TB during the audit is roll fund balance and make sure that the balances in the fund balance and net position accounts for the current year trial balance agree to the ending balances in the prior year issued report. So ask yourself if you've received all of the adjustments. You've given your auditors the preliminary trial balance. So make sure that all PBC entries that you've provided to them have been reflected in that trial balance and are now in those opening fund balance and net position accounts. Your auditors may have made some entries after the preliminary trial balance. So make sure to get a copy of those entries to make sure that your records match what your auditor's records are. So reach out to your auditors to get a copy of all of those journal entries made to make sure that your records are inclusive of all activity that happened between the preliminary trial balance and the issued report. So now we're going to move into October and December, and this is where a lot of your auditors' interim work can happen. So what kind of things can we be doing at this time? Well, one of the things that your auditors can do without a trial balance is your pension and OPEB. Reporting packages, especially in state-sponsored plans, are typically available 6 months after the measurement period year end date, depending on your entity's measurement date, whether or not you get evaluation every year or every other year. There's an opportunity here to get a jump start on some of that testing. From a testing standpoint, some of those typical requests relate to your census data. So your auditors are going to request a copy of that census data evaluation that you sent to your actuaries. They'll also request some things to be able to make some selections from that. If you have new hires during the year, providing them a new hire listing that aligns with the measurement year, as well as the termination listing and the year-to-date payroll register. Now, whether or not you are engaging your auditors to prepare entries for your pension and OPEB amounts, or you do those yourselves, keep a copy of those monthly contribution reports. As you make those payments, wherever you house all of your audit information, create a folder for that. Your auditors are going to need that to either do the entries or to tie out those deferred contributions. If you participate in other plans like a retiree healthcare plan or even a single employer pension plan like a fire or a police pension, the biggest area here is, or the biggest key here is to work with those actuaries immediately after that measurement period year end and see what kind of information do they need. If you need to provide them a census data file, or if there's other information or amendments or summary plan descriptions that they need to be able to do their valuation, work with them early to where you'll be able to get those actuary reports ahead of your audit and not during your audit. Another area during this time that your auditors would like to get a jump start on is going to relate to your long-term debt. Now, we're assuming that payments are happening twice a year. So start utilizing your roll forward, not just for audit purposes, but keeping track of the activity during the year. Start with updating your beginning balances to match your ending balances, and then update for that current year activity. Did we issue new debt this year? Did we refund debt this year? Keep track of those principal and interest payments in there and maintain that so that way when your auditors come on site, they can go ahead and knock that out. This is a perfect opportunity to start working with your bond counsel as well to see if any of your existing debt is subject to arbitrage. We've been seeing over the last few years that arbitrage is becoming more and more prevalent, so much so that a lot of entities are having to bring on an arbitrage liability. As we mentioned, this is an area that your auditors can get a majority of their testing done, barring the return of those confirmations and tying out to the general ledger and the trial balance. And during this interim time, if you do have those tricky situations like a full refunding or even a partial defeasance, reach out to your engagement executive to talk through that, to talk through the accounting and the implications of that. So we're going to move to our next polling question, and this is asking, how often does your organization review their year-end close to-do list? Are you doing it every year, every other year, as needed, or do you not have a formal process documented? We'll give y'all just a minute to get your responses in. But I do have a question for Karen on this. Karen, whenever you were at your former municipality, what was y'all's review process as it related to your year-end to-do list?
We definitely reviewed that annually, Tyler. Sometimes we had a little bit of a turnover in staff and we needed to do some reassignments. That was important. It was, there's really, it's fairly consistent to-do list, but sometimes the new standards can add items to the list, right? So we wanted to make sure that we were thinking about that ahead of time, putting new things on the list and assigning those. And it took some discussion because, new items are new and sometimes we just weren't sure how to handle them. So I was really glad that we had ample opportunity to think through, in particular, the leases going back to those years. Mm-hmm.
Yeah,
and
sure.
that was the way that we handled it.
Yeah, and I think the responses that we got on this question are very good to hear as we move closer and closer to audit season. It looks like the majority of people are reviewing those year-end to-do lists on an annual basis. And then the next one is as needed. And like Karen said, annually is probably best practice, but that may also tie into as needed. You may have the same staff that you had for the previous years, but it's crucial in those years that you do have turnover to be able to reassess and reallocate those responsibilities.
Absolutely. Okay, so now we get into the year-end close. So we've gone back and we got some pension work done. We did some OPEB work, as Tyler was talking about, a little bit of work on the debt, but now we're really getting to the meat of the year, right? We need to get those books closed. A couple of things that I want to put out here is ideas that we've heard from other guests when we've done this presentation at various points. We had a finance director tell us that he sent out a weekly email starting 6 weeks before the year-end close that had a big red 6 at the top of it. And it said 6 weeks until close. And these are the items that we're expecting from your department. And then the next week, he would send the same email, but with a big 5 on the top. And as you kind of do that countdown, there's really no excuse or, opportunity for something to be missed. And I thought that was a fabulous idea that finance director was really taking control of the process. Another person who is in charge of a finance department told me that they actually closed down the accessibility to their P cards and before the year end. So you may choose to do that a day or 2 or 3 or 4 before year end, just to make sure that you have a nice clean cutoff. And part of that was I sent out emails like that saying, hey, please don't use your P card unless it's absolutely necessary in the days leading up to year end. And I actually would prefer it as well. And that's generally a holiday, or can frequently be a holiday if you're, of course, December 31st. But that will also facilitate the cutoff. But, we talk about why, the importance of having a quick close, but, really what does that do for us? Well, most importantly, if you're able to close your books quick, then you have timely financial reporting. I think that leads to so much credibility for your finance department. If your last month is closed quickly and you're getting that ACFR out, it really gives your councils a lot of confidence in the process and in the finance department as a whole. Additionally, the reliability of the information is just so much better. There's literally thousands of transactions that occur in municipalities, and if you're close to year end, then you're going to remember to make those accruals. You're going to remember those transactions and the details and who to ask for if you need additional information. Once you get 2, 3, 4, 5 months down the road, it can be really hard to recall all the details and of certain transactions and who you need to discuss that with. If you're closing your books quickly, I feel that it also reduces stress on your staff. I know that day-to-day, the payables and doing payroll and recording all of the deposits can just be overwhelming, just keeping up with the day-to-day, and putting audit on top of that for your finance staff can just be an extra burden. But if you've given yourself the extra time and you're caught up with those bank recs and your investment reconciliations, it really helps to make everyone feel better about it. One of the things that I did was to have a kickoff meeting before the end of the fiscal year. We talked about how we were going to close. We divvied up that the list of closing tasks, and we established our due dates. And I think just getting everyone on the same page and kind of excited to wrap up the year is important. Of course, this will also ease the preparation of your financial statements once you have your books closed. That will help, and your auditor will be so happy, and you'll be so happy that they can get their work done quickly and get your ACFR or your financial statements issued. So going on to the some ideas for accounting policies and procedures, you want to start with an end in mind. So when you have your list of closing items, consider the due dates of those lists in relation to when your audit is coming up, or any other external financial reporting that you do. I know there's a lot of reporting that needs to be done on state sites, and think about that as a whole. So set those deadlines in time to go with your reporting requirements. Cash confirmations or investment confirmations, that's something that is a procedure that really you could get started fairly close after the end of the fiscal year. We know what those balances are on the last day of the month once we get our statements or log on to our banks. Sometimes confirmations are electronic, very occasionally still they're paper-based, but I'd encourage you to develop those right after year end and work with your auditor to get those mailed out quickly. Also, items to consider would be looking at draft CFAs, and at this point you should have a real good feel for your grants and start assembling a final CFA. I know bills can come in late, and that can can cause one program to have more expense and one to have less expense. This kind of goes back to working with your vendors to get your bills timely so that there's not that surprise at the end. Would also encourage you to reach out to other departments, and this is typically utility billing and courts. While in finance, we can generate many of our reports historically, almost all of them. Sometimes in utility billing or court, you cannot. Reports have to be run on the last day of the year. I'd get together with those two department heads at the start of the month, of the last fiscal month, and map out when was that last day going to be? Is that falling over a weekend? Do we need to have someone come in? Do we need to stay late? Maybe someone has to be there even on a Saturday or Sunday to run those reports, but it's good to get that timeline with your department heads established early in the month.
All right. So as we talked about, the ACFR is very important, but as we saw with the onset of COVID-19, a lot of municipalities were getting a lot more grant funding, and a lot of them were getting single audits that have historically never had them. So, just as important as the ACFR is, we also need to be considering, are we subject to a single audit this year? And as Karen mentioned, getting that draft CFA to your auditors early enough so they can identify if you are subject to a single audit may result in additional requests related to some compliance testing. So these are some considerations to keep in mind as it relates to your compliance testing. A lot of grants are going to require some sort of intermittent reporting, be it on a monthly basis or with the CSLFRF funding, quarterly reporting. So as we previously mentioned, reconciling your CFA on a quarterly basis to these reports that you are required to submit to the granting agency will help identify and help reconcile your CFA. Also, use your CFA to ensure your expenditures match those submitted reports and that you're capturing all of your revenue. Are you getting all of this funding up front? And is it sitting on as a liability on your balance sheet, or are these reimbursement grants where you have to submit requests for reimbursement and then record that revenue? Quarterly reconciliations ensure that all expenditures are captured, but you may have a department, like a transportation department or a housing department that enters into some miscellaneous, some small grants that don't warrant a single audit, but that do need to be captured on that CFA or CEFSA. Some items that your auditors can do during the interim time if you are reconciling your CFA on a quarterly basis and get it knocked out before we get to that final audit fieldwork time is some report testing, getting a population of those reports and testing that. They can do some interim expenditure testing, some interim procurement testing. So if you're able to get your auditor a draft reconciled quarterly CFA, ahead of fiscal year end, a lot of that testing can be knocked out ahead of time to where you can focus more on the ACFR in the final stages. So this link is a GFOA best practice document that talks about timely financial reporting. And as Karen mentioned previously, that timely financial reporting is key. A lot of times, or the GFOA defines timely financial reporting as making these financial statements available in time to allow decision makers to make those decisions. So the goal of this timely financial reporting is to make sure that your ACFR or your financial statements are published as soon as reasonably possible. Most municipalities or entities that are submitting with GFOA follow that 6 months after year end to get it to submit to the GFOA. The other side of this is the reliability of that information. And GFOA suggests that you balance your timely financial reporting with the reliability of that information. We do not want to sacrifice reliability for the sake of timeliness. And this is going to be where your accounting estimates come into play. Are you going to use like a trend analysis to make your estimate? Are you going to use historical data to be able to do that? So big message here is don't sacrifice the reliability of that information just for getting your ACFR out ahead of where you were last year. This article also provides some recommendations as it relates to recording your activity throughout the year, your closing and financial state preparation process, how to implement new standards and tie that into your year-end close, your financial statement format and distribution, and then finally contracting for professional services. So I think this is, as we move into that audit season, I think that this is a great refresher on things to keep in mind as we try and start the audit season and get some reports issued. So the next polling question relates to what are you outsourcing to your auditors? So what year-end items are you currently outsourcing to your auditors? Are y'all doing it yourselves? Are you outsourcing those GASB entries, related to pension and OPEB, leases and SEBITAs? Are you outsourcing the preparation of your financial statements in your CFA, or are you engaging your auditors to do multiple items? So we'll give you all just a minute to get your response.
However, while our attendees are responding, then I think I'll kind of kick that question back to you and your experience with all the governments that you audit and here at the firm. What do you find is the most commonly outsourced item?
So I'd say for us in our office, we do get outsourced to do a lot of the pension and OPEB entries, as well as the financial statement prep. Depending on your staffing at your entity, you may be able to keep some of those things for you. But sometimes with turnover, you may have someone that was responsible for those pension and OPEB entries. So I think this goes back to, or about what we're about to get into about communication is work with your auditors to see if there's anything that they can assist with. So it looks like we have a pretty good mix between either the entities keeping them for themselves, and next highest is multiple items. So we're going to go ahead and jump over to some reporting considerations and address some of these there. So as I mentioned, communication is key. So as it relates to your auditors, this goes back to communicating with them of staffing changes, as well as, if you've historically done all of the pension and OPEB entries yourself and the drafting of your financial statements, and now, you had some turnover that you need your auditors' help, communicate with them. The ACFR is not just being drafted by the finance department. So getting your departments plugged into the drafting process and getting them excited about the information in the ACFR is crucial of getting the other departments across your entity involved. Component units and related parties, you may outsource some of your component units to other firms. So it's really crucial that not only are you communicating with the auditor of your main report, but also communicating with the other auditors in the component units to make sure, hey, we're planning to issue our ACFR on this date. Is your piece of the audit going to be ready by that time so we can get it included in the report? And then, as we mentioned previously, the actuaries and other custodians of information, communicating with them early and often to make sure that you're getting, they're getting the items they need to be able to do your evaluation and get you your report so they can turn it around and get it to you, and you can get that reviewed and approved prior to the audit starting. So now we're going to move into some more reporting considerations as it relates to your report. So the introductory section has a lot of items that you can go ahead and gather up now. So your organizational chart is typically approved at the beginning of your fiscal year. So as soon as that gets approved, again, wherever you house all of your audit information, your auditors are going to request that. So set that aside and make sure that that's available. The management's discussion and analysis, you won't be able to get the numbers right away, but think of the entire year. What big projects were going on? Did we have a larger than budgeted sales tax revenue or property tax revenue? Getting a feel for why revenues and expenses fluctuated year to year. And then as it relates to your capital assets and debt, if you issued new debt for the purposes of a new construction project, a lot of the fluctuations can use the same explanation. The next thing is your GFOA certificate of achievement. And I think we really want to highlight this one because this is entities that get this certificate, this is a big deal. There is, as we've seen on that checklist, there are a number of items that you have to meet to get that passing grade and to get your certificate of achievement. So while it just gets slapped into the ACFR at the end of the audit usually, celebrate that with your council, celebrate it with the other departments. As we mentioned, this isn't just being prepared by the finance department. It takes a village to be able to draft these 100 plus page reports. And it needs to be celebrated whenever you get that award consistently over and over again. And then the T letter. This generally doesn't have a lot of changes year to year, but this is another area that you can go ahead and start getting a big picture idea of changes from prior year to current year. So budget to actual, this is another area that usually kind of for ACFR drafting purposes is sort of an end of audit sort of thing. But as soon as you get that operating budget approved, compare that to your groupings with the prior year ACFR to make sure what you're expecting to be shown on your budget to actual schedule matches what your auditors are expecting to see in that. And so if there are differences, you can identify those, say, hey, this is the work we've done. This is how we tied it out to the budget. And consider creating a shared budget folder. This is going to be where you can put in some of those budget amendments as they're approved and update for the amended amount on those budgets. And this is a perfect place to address unbudgeted items and indirect costs. In the MD&A and in the footnotes, you're going to document why revenues or expenses were over appropriation. So make sure you have an understanding of why things didn't go according to budget. And then work with your auditors to ensure consistency with the final trial balance. And this goes into the next piece here, is figuring out which funds are required to have their budgets disclosed in your annual report. Typically, this is going to be for your general fund, your debt service, and your special revenue fund. So again, when you create those budgets, compare that to what's on your side, share that with your auditors. And I think, again, getting in front of this early and figuring out the groupings for these will save a lot of time at the end of the audit and address those fluctuations and appropriations. And then the statistical section, the first 4 tables of the statistical section usually get completed during the audit. So, those will not be ready at the beginning of the audit, but there are a lot of schedules that you can go ahead and prepare prior to the audit starting, depending on your fiscal year. These are going to be things like your operating indicators, your capital assets by function, your property tax roll. So it's just a matter of knowing how these items are prepared. Are you going to have to go to those departments to get their operating indicators and their capital assets? You're going to be working with utility and public works. And some of that information is going to be available at the end of the calendar year from various agencies, be it your state comptroller, your appraisal district. Once you find that information, we recommend including in wherever you're doing your statistical section, the website where you got that from. So, if someone else is going to be responsible for the statistical section in future years, they know which site you're pulling that information from. And that way, your statistical section is going to be consistent and comparable with how it was reported previously.
Thank you so much, Tyler. All of those tips are great and really can facilitate the preparation of those financial statements as well as the ACFR and the statistical. But what if you find you're short-staffed? It could be due to retirement or folks, moving out of the city that you're at. We across the country, we have heard it is just not uncommon to have 1 or 2 or sometimes even 3 vacancies in finance departments. So how do we address that at these very busy times of the year? Well, you may consider government outsourced accounting services, which is part of our public sector advisory services. Also, the use of the reporting solution, which we will touch on briefly, and grants management services, all things that you can consider as you're getting ready to close your year. So what does this mean exactly? So our government outsourced accounting services line can handle a variety of projects for you. Things, for example, cash and cash equivalents. With regard to that, we can help on bank reconciliations. We're finding that many entities aren't keeping up with that. They get behind a month or 2, and then it starts to snowball. And the things that we can assist with for our local municipalities are also applicable to counties, school districts that follow GASB, and public power providers, entities that are following governmental accounting standards. As far as receivables, this can be rolling forward note receivables, looking at your receivables for 87 and 96 for the lessee. How do I amortize my right to use lease asset and reduce that lease liability? That might be a sticking point. How do I measure a new lease? What do I do with changes in my leases? We can assist with some of those technical finer points, and you can carry the rest of the items that your staff is able to take care of. Capital assets, as we discussed, do tend to get put off to the end of the year. And if you're having trouble getting your roll forward together, we can assist by looking through your GL. We can have those conversations. Sometimes construction is outsourced. You might have a general contractor that one might need to get in touch with that's managing, depending on your size, the projects and see what's closed and what's still open. Along with the capital assets, that kind of ties in, I should say, to accounts payable and retainage payable. We'll look at those final pay applications, see what is in retainage, and make sure that that is reflected on your GL. With leases and civitas, we touched on that. That can, there's of course the asset side and the liability side. With accounts payable, we can do a preliminary search for unrecorded liabilities and see if anything comes up. Sometimes you'll get a very late invoice and whoever's coding that may not be thinking about year end anymore and may code that to the current month when it really needs to get pushed back to the prior year. And we can identify those items before your auditor comes in. Compensated absences is really high on the radar right now, as GASB 101 is effective for reporting periods beginning after December 15th, 2023. So if you have a December 31st year end, the report that you're going to be developing, that will need to include GASB 101. And if you have a June 30 year end or September 30 year end, you'll need to be thinking about this for 2025. Moving on to long-term debt, Tyler had some great suggestions for you, keeping up, looking at that, your debt repayment schedule, making sure all of your payments are recorded. If you have trouble, however, with some of those odd items like the pensions and the OPEB, even though GASB 68, that was issued in 2012 and it was effective in 2014. But here we are 10 years later, and it's still something that, we only do once a year. We're just not thinking that giant pension entry. So we can help with that, as well as 75. In the area of single audit, we can assist in drafting a CFA for you. Again, reconciling that CFA to all of your expenditure accounts, your receivables, revenue accounts, making sure all of that ties out nicely. And then finally, assistance with the annual ACFR presentation ACFR report, or you might just have an annual financial report that you do. But depending on the size of the organization and the number of vacancies, you may need assistance with even these smaller items, and we're happy to help.
All right, so imagine this. We are 2 days from issuance. We go to update our ACFR for an adjustment, and we go to save it, and then we get a corruption email or corruption error message, and we have to restart our ACFR again. Well, with the reporting solution, we can mitigate a lot of those issues. The reporting solution is a web-based ACFR prep tool. It is not linked to your ERP system. Rather, you download your trial balance just like you do for your auditors, and upload that to the reporting solution. This allows for a more streamlined process. This allows multiple users to be able to get into the report and update it at once. But don't freak out. Even though you can have a lot of users in the reporting solution, you can actually restrict their access. If someone should only have access for updating the statistical section, we can restrict their access to everything else on this and only give them editing access to the statistical section. This also streamlines the production of the ACFR by linking financial statements to other areas of the report, such as the MD&A, the notes, and the statistical section. Previously, if you had a last-minute adjustment that had to run through, you go and make sure that your financial statements work, but you've got to go update that narrative. You've got to go double-check that the percentages are correct. Well, with the reporting solution, you can actually embed formulas and links within the narrative. So that way, when you update the financial statements, those numbers in the MD&A, the notes, the statistical section update in real time. You can actually set check figures between statements to make sure that all line items are being captured. And as we just mentioned, automatic changes and updates are made in real time. If you've decided that this year we no longer have investments, or we're going to collapse this into one line item of cash equivalents, and investments, you can actually move those accounts to that line item, and you can see that change happen in real time. And same with rolling forward the dates, or linking to your cash flow worksheet in here. But really, at the end of the day, the days of Word and Excel are starting to get smaller and smaller. So finding a tool that's going to best serve your entity in the drafting of this massive document to still be able to get that certificate of achievement is the big picture here.
Talk for just a moment about grants management. We understand that so many municipalities have just been deluged with federal funding over the last several years. At this point, you may have someone in place that is managing all of those grants. Then again, maybe that person leaves, or you're just receiving more grants than really one person can keep up with. We understand those challenges, and we can offer experience with an end-to-end grants management system. Grants management and compliance services can cover a gamut of address needs such as strategic planning and grant writing, planning and development, project management and technology, compliance and process assessments, even writing of grant policies and procedures, and looking at your funding allocation and procurement methodology, making sure that's consistent with the grantor documents. We can take a look at allowable costs by funding source, make sure that's consistent, and do subrecipient monitoring, as well as the single audit preparation and project closeout, and of course, reporting, drafting of that final CFA, which is so important. So we've reached our final polling question, and that is, would you like us to contact you to discuss this topic further? And we'll give everyone just a minute to answer. We want to make sure that we leave this item open so you have a chance to get your CPE. And we would really thank you for coming. I know there's been several questions that have come through the chat. We will respond to those questions. And of course, we have your emails. So we'll reach out either by email or by phone. Sometimes we just need a little bit more information than is what put in the question to clarify and answer, and be happy to do that. So thank you so much for spending an afternoon with us, and happy holidays to everyone.